And what that tells me, these are Japanese 30-year bond yields, and these have pushed sharply higher since the Fed cut last September. Take a look at Great Britain. These yields have pushed sharply higher. Take a look at Germany, sharply higher. Take a look at France, sharply higher. And so, what does this tell me? Well, it tells me that investors are not willing to lend to these developed economies at such paltry rates of return. And where is this money flowing? Well, these investment sums, I think, are flowing into gold. Now, gold, fresh all time high today, above $4,000 for the first time ever. And this is also a parabola. But if you price gold in real terms, so you've got to take into account inflation. Let's just go ahead and take a look at this chart on a monthly if we zoom out a little bit. So these are gold futures. I don't have all of the data for, those gold futures only go back, I think, like 15 or 20 years. What I really want is just like a spot index. Okay, so this is a gold spot index, and this goes back all the way to 1833. So you might look at something like this and think to yourself, oh my goodness, gold is just on a tear, ripping higher. When does it correct? Well, that would be true if you're viewing this chart of gold in US dollar terms and the US dollar with its purchasing power today. But if you price this in USM2, so if you divide by USM2, you get almost like a gold in real terms. So this is taking into account inflation. Now you could use CPI or you could use, uh, you know, some other inflation indicator and price gold and silver in those inflation indicators if you want to. But I think CPI is manipulated and fake. So I just price it in USM2. And what I see here is, yeah, gold has really rallied, but it's got plenty more room to run. So that's kind of an interesting observation. We haven't even in real terms, gold has not even gotten back up to its highs from back in 2011 when I first started trading. So yeah, gold has put in fresh all-time highs, but in real terms, it looks like it's got plenty of room left to run. Now, if we take a look here at silver, this is silver in US dollar terms, the purchasing power of the US dollar today. But if we repeat that same exercise, and silver is sitting just below 50 bucks, if we go ahead and repeat that same exercise and just go ahead and bring up, a silver spot index and then price it in USM2 to take into account inflation, what we see is, yeah, silver has really started to run, but compared to the 2011 highs and compared to the 1980 Hunt Brothers manipulation highs, silver hasn't even started. It hasn't even started to run. So, yeah, could there be more upside ahead for the precious metals? Absolutely. No doubt about it. Especially if the US dollar breaks support and pushes towards 90, then I think gold and silver would really rip higher. And so that brings me to Bitcoin and Bitcoin in gold terms. So let me go ahead and zoom in here to a daily. Now, I've brought this chart up a handful of times. If I just, show this chart, I see a head and shoulders pattern. This is a bearish price action pattern, and the pattern completion for something like this would be right around right here, something like that. Now, that would mean either that gold really continues to rip higher and Bitcoin moves sideways and does nothing, that would push this to the downside. Or if gold rips higher and Bitcoin sells off, that would push this to the downside. So those are the two things that I'm watching here, but I don't think that's likely. I really don't think it is likely that Bitcoin breaks down in gold terms. So we'll see what plays out here, but this is an important level of support that's worth watching. If Bitcoin is able to hold this level of support and really push higher and close, maybe a couple of weekly candles above the 200-day moving average, I think that would signal that we're starting to see a little bit more of a rotation from gold into Bitcoin. That's what I'm looking forward to seeing.